Yeah, so in the earlier video, we were talking about stage analysis. So the three different stages of stocks, right? Stage one, stage two, stage three, and stage four. In this video, we'll talk briefly about our entry setup or entry tactics, right? So when you find a stock in stage two, you like that stock, you have done your research, and you want to enter that particular trade, right? So you need to have a setup so that you can enter the trade with a defined risk or a stop loss. The purpose of an entry tactics is basically to have a place where you can put your stop loss, and the risk of that stop loss being hit is lower, and there's an option or opportunity for that stock to move forward very quickly so that you will have an opportunity to gain some profit out of that stock, right, without wasting your time. Time is also money, right? So you don't want your money to be tied up in one stock for a long time. So that's the purpose of trading. You have to enter a trade, you want to capture the momentum, exit the trade, and take out the money and put that into some other stock which will be in a stage two or a momentum. So if you look at this stock has been trending up nicely, and here uh, this is a weekly time frame. Here the stock was moving from stage 2 to stage 3, stage 4 kind of an environment, right? This is basically stage 4 here, and here the stock started pulling up nicely, and you can basically see that here it's a stage 1 structure. So it has moved up a lot, it had pulled back basically, and here it has been started, then starts consolidating, right? It started consolidating above its moving averages, and because of that, um, the stage is getting accumulated. So long-term investors find value at this stock, and they started uh, buying out this stock, and at some point the buyers the buyers exceeds the amount of sellers in this particular stock. So if you draw a line here, so this is a clear consolidation of couple of weeks, right? For couple of weeks this particular stock has been consolidating. So there's a clear area for about 2 to 4 weeks of consolidation, and after that consolidation the price starts breaking out that range, right, with a clear increase of volume. So if you are a investor in this particular stock, you should then be looking to buy off starting from the next week. Once this particular candle closes with a large volume, you want to then start buying this stock. You can put your stop losses somewhere below that candle. So you have a range of about 12 percentage of stop loss. So you want to adjust your position size accordingly and enter your trade somewhere around this area. You can enter on a pullback if you want to reduce your risk, but this is basically the concept, right? You enter on a breakout of the stock. You can use lower time frame to reduce your risk, but the concept is you enter after a breakout, you put your stop loss below this candle, and you then uh, ride this entire wave, right? So basically from here you are basically for a 12 percentage risk, and if you trail below your 10 week moving average, you are some stopped out somewhere here, right, which is about 76 percentage. So you got a nice move. uh, that's basically the concept of the entry tactics.